Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time. And this week's topic, guys, is on how to be a successful trader. I know it's a bit of a broad-based topic, but trust me, we're going to dwindle it down. You see, everybody out there is like, oh, well, you need patience and you need time and you need discipline. Guess what? You need those things for every damn business if you want to be successful. I don't care if you start a flower shop, a construction company, a restaurant, it doesn't matter. You're going to need all of those things. So what? So today is not about those things. Today is more trading specific. For example, what type of batting average do you need to be successful? What type of win-loss ratio do you need to be successful? What kind of is a proper account size you need to be successful? A proper timeline to be successful? And we're going to dig deep into each one of those things so you guys can have a much more realistic opportunity to be a successful trader. Because what I'm seeing out there online with all these gurus is simply they're telling you can take $20 and turn it into a gazillion. You can do it in 13 hours. Doesn't work that way. They're not telling you, hey, what kind of a batting average is acceptable to be a successful trader? What kind of Sharpe ratio, win-loss ratio is acceptable to be a good trader? How many trades per day do you need to be taking to make money? What size of account will get you to your goal? Let's say you wanted to make $200,000 a year. Well, what size account do you really need to do that? Okay, so we're going to talk about all of those things today. Basically, how to be a successful trader. And the reason I'm doing this is many of you have failed before you've ever taken your first trade. And the reason being is you came in unprepared. You came in with expectations that did not meet reality, right? Your expectations grossly exceeded your experience level. You are overhyped and undercapitalized. What we need to talk about all those things so that you will have a much better opportunity to succeed in trading. Why? Because it's a wonderful freaking business. Is it hard? Are you going to work for it? Hell yeah, you're going to work your ass for it. Hardest thing you've ever tried in your life. But if you can get it, imagine you can do it from anywhere in the world with a laptop and an internet connection. It doesn't get much better than that. No rush hour traffic, no boss, none of those things. So stick around for today's lecture. If you like these videos, please click the like button, hammer, smash that subscribe button. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is how to be a successful trader. I say, what? What is that? That's such an esoteric topic. You're right. It is a broad-based topic, but it might not be exactly what you think, okay? We're not going to talk about discipline and patience. We're not going to talk about any of that stuff. We're going to talk about more specifically how many trades a day you should be taking, what kinds of batting average are successful, what kind of an account size do you need to hit the goals that you're interested in hitting. Trading plan conversation, we'll have a little bit about that. So it's a bit of a broad-based topic, but I think it's an important one because many of you are skipping certain steps, or even if you're not skipping those steps, you're not understanding how A gets to B. Let me explain briefly before we dig in. Some of you are like, yeah, I need to make $100,000 a year. Okay, fine, that's great, right? That's what you want, but the how to get there is a whole different thing. Well, how much time is that going to take? How much money is that going to take? How many trades per day do you think you're going to need to get to that? I don't know. I never thought about it. Well, you will today. Okay? You will today. Whoops. I just messed that up. All right. But before we get into how to be a successful trader, we first must have to, because we have to every week. It's too much fun. When will the insanity stop? This week's edition of When Will the Insanity Stop? Not crazy egregious, but it could be, right? It could be. None of those, hey, I lost $50 million trading, but it is I think a pretty bad one. So we have somebody who likes IBIO, and this wasn't that long ago. This was 8 days ago. IBIO, one thing I learned being here for over a year and having this stock 100% of my portfolio and my entire life savings. So let's get this clear before we continue. It's not just 100% of this person's portfolio. It's also their entire life savings. Can we have a moment of silence, please? What the huh? It's not just your entire portfolio, it's your entire life savings is in IBIO, some dog shit company that has the world's worst chart. But hey, YOLO. You know, this guy's basically saying, the market doesn't really care what I think. Well, that part you're accurate about. Posting bullish or bearish or to the moon or wait for Friday or wait for Monday, blah, blah, blah. Literally has zero effect on the stock price. So this person isn't completely dumb. They're not entire. They're only about 98% dumb. There's 2% of, at least there's some cognitive ability to this person. They actually understand that the market doesn't care what you say. Hey, market, go up higher. Oh, yes. Wow, it didn't go up higher. I don't know why. Right? So literally has zero effect on the stock price. Well, that's a good start. Now we just have about 98% more to get to. All right? So entire life savings, common sense is just a very uncommon thing. This chart is just ridiculous. Guys, if this happens to go back up to 10, 20, 30, 40, it'd just be dumb luck at this point. It's a really good company. No, it's not. It's a dog shit company. Okay? And the chart pretty much tells you that. Okay? Stocks aren't $1.38 because they're Microsoft. They're not $1.38 because they're Apple. They're $1.38 because they're not Apple. Okay, that's why it's $1.38. All right, period. End of discussion. Might you get lucky and get a little YOLO and get back to $60? You might, but you might also get struck by lightning when you walk out your front door. Either one of them is possible. It's just not likely. Okay, but you have your entire life savings into this dog shit stock. What's wrong with you people? Come on, man. I'm done with this one. That's just, you can only beat a dead horse so badly, and you just feel bad for this person. That's it at this point. It's self-inflicted, but you still feel a little bad. All right. What does it take? What's it take to be a good trader, right? One of the problems or issues I see with a lot of folks when they come into this business is they really don't know what it takes to be a good trader, okay? You see, it seems like in other businesses, people have a better understanding of what's required, right? If somebody goes up and opens a restaurant, they think to themselves, okay, well, what's a popular type of cuisine? Are hamburgers popular? Or chicken sandwiches popular? Do I want a French restaurant, right? And then they seem to understand, okay, well, to be that, I'm going to have good food. I'm going to have a nice ambience. The location's going to have to be good. My marketing's going to have to be on point. My price point's going to have to be like, you just sit there like, yeah, there seems to be this modus operandi to knowing what it takes to open up a good restaurant. Now, your restaurant may or may not succeed. That's not the point, but there's kind of a path for you. A lot of people don't really understand what the path to be a successful trader looks like because they haven't actually sat down long enough to think about it because they're still YOLOing, right? They really are. I mean, we joke about it all the time, but it's actually pretty serious. People are just out there reading some article online and just saying, okay, I want to be a trader. Or they see Elon Musk is in Doge, or they see somebody else is in crypto, or somebody else is in Forex. Oh, I'm going to do that. How much thought have you really put into this? Probably not that much. Well, it's time to step back and put some more thought into this because it could take your money and a lot of it, depending on how much of it you want to put into your trading account, right? So these types of things are what you commonly hear, right? Oh, you need patience to be a good business owner. You need discipline to be a successful business owner. You need to put in effort, right? Persistence overcomes resistance. You need time. Yeah, it takes a little time to get good at stuff. You need money. No shit. Really? Wait, common sense isn't that common, Jared. Don't talk like that. Talk to the people like you're supposed to. Guys, you need all these things to be successful in business, but no shit. Of course you do. Every business requires these things, okay? So this isn't how to be a successful trader. That's how to be a successful business owner. That's not today's topic. Today's topic is how to be a successful trader specifically, okay? So this is not what we're going to talk about today, all right? Patience, discipline, effort, time, money, all those things are required in any business. That's a given. That's just a given. The one that most of you guys forget in this business is time and money. Most of you come in really just undercapitalized. But time and money are the two things that most people seem to forget about when they want to be a trader. Let's talk about trading more specifically, okay? So when you come into this business, this is just a list of a few. There's probably 5 or 10 more things I could have put on this list. But batting average, what kind of batting average should I have? What kind of win-loss ratio is realistic? Okay, goals. Well, how many trades should I be taking per day? What type of account or what size account do I need? Do I need $3,000 to trade? Do I need $300,000 to trade? Okay, my trading plan. Should I even have a trading plan? What is a trading plan? What's it going to do for me? How do I make one? How do I build one? What about intangibles? All right. things that you might be good at that other people aren't good at that might help you improve the success of your business? What about trade management? We're going to talk about all those kinds of things today. And I understand, guys, when we talk about batting average and win-loss ratio, obviously you could be all over the map here. You could be all over the spectrum, okay? But there's a range, a general range that most traders fall into. Sure, you could have a 15% batting average and make money. It's just not common. Sure, you could have a 90% batting average. It's just not common. There's a range most people fall into. Does anybody know what that general range is for batting averages? What's the general range that most traders fall into for their batting average? A range, not one number, a range. To be successful, a range. There, Alvaro has it. 40 to 60% is the range. Most traders will fall into that category. Sure. Will some traders be at 30%? Will some traders be at 70%? Sure. But most traders will be between 40 and 60% batting average. Okay? Win-loss ratio. Most traders will be between 1 and 3. Between 1 and 3 on your win-loss ratio. Most traders. Okay? So we're going to talk about those first. All right? You guys have heard me talk about this. Does your batting average really matter? Does your batting average really matter? Okay? So it does and it doesn't, right? Meaning it matters, but by itself, in and of itself, in a vacuum, it doesn't matter. Okay, so yes, it matters, but by itself, it doesn't matter. So real quick, I'm not going to spend much time on this because I don't want to patronize you guys. This is mainly for somebody who's brand new and has never thought about trading before. What is batting average? Number of winning trades divided by losing trades. I think we all get that. Okay, I'm not going to spend much time on it. I think you all got through second grade math. Okay, total trades, 50. Winning trades, 30. Losing trades, 20. What do you have? A 60% batting average. Okay? So most people are going to be between 40 and 60%. All right? I think we get the batting average side. But the question then becomes is a 60% batting average good? Well, it really depends, doesn't it? Okay? It depends on what? Well, it depends on when you win, how much do you win? And when you lose, how much do you lose? All right. If you lose a lot when you lose and you don't win that much, for example, today somebody in the chat room said, if I get down 2R, I'm going to quit trading for the day. I'm like, question, well, naturally you go, well, why? Well, because I've noticed that if I get down 3, 4, or 5R, it takes me too long to come back from that level of loss. And that's very logical. Think about that. How many of you out there are having 4R down days, 5R down days, and it's taking you the entire rest of the week to get it back? Again, you've heard me say it, but I'll repeat it. You might have a minus 4R day on Monday, and then Tuesday, Wednesday, Thursday, Friday, you're up. But you made 1R in each one of those days, and Friday, you get to the end of the week, you're break even. Because of one stinking day, you're break even. And that's after trading 80% of the time you traded well. 4 out of 5 days you traded well, but because of one bad day, you ruined your whole week. The opposite happens too. Monday through Thursday, you go really good, really good, really good, really good. Friday, really, really bad day, minus 5R. Boom, your whole week's done. You just wasted the entire week, but yet 80% of the time you did the right thing and only on one day you didn't. Okay? So the question is, how do you mitigate that? Be smart. Be smart. Recognize through back testing that, you know what? Once I do more than 2R, it typically takes me a few days to get that back. Maybe I should just stop at -2. And very rarely when I'm down -2 do I actually get it back versus making the situation worse. Again, it's going to take some introspection here. It's going to take some management, okay? Meaning back testing. All right. So win-loss ratio. All right. Your average winning trade, okay, versus your average losing trade, okay? So in this analogy, right, $170 winner, $700 winner, $30 winner, $300. Those are your winners. Those 4 winners, okay, from $30 to $300. Your losing trades, $350, $450, $700, okay? Your average winner here is $300. Why? We're going to take 300 plus 700 is 1,000 plus 170 is 17 or 1170 plus 30. That's $1,200, right? So we add them up, 1, 2, 3, 4, add them all together, you get $1,200. Divide by 4. Why 4? Because there's 4 trades. So the size of your winner, your average winner is $300. Your average loser is 193. So your win-loss ratio, your Sharpe ratio is 1.55. So the natural question is that good? Well, it depends. Do you have a 60% batting average? Do you have a 20% batting average? Okay, so don't get me, guys, there's a point to this. I'm not just wasting your time to waste your time. Now, for some of you, this is new information and you're learning. Trust me, there's a method to my madness. Just stick with me, okay? Is a 60% batting average good? Is a 1.55 win-loss ratio good or bad? Well, in and of themselves, separately, they're nothing. They're just a number. Together is really where it matters, okay? But that's not what we're going to talk about either. We're going to get to that, but we're going to go further than that, okay? So what's more profitable? You guys have seen this slide before. I've put it up. 50% batting average with a 2.0 win-loss ratio or 60% batting average with a 1.5 win-loss ratio? Anybody know? You've seen the slide before. If you're new, you might not know, but for those of you who have experience, you've seen the slide before. Well, good. You're paying attention. They're the same. Right? They're the same. Let's take a look. 50% batting average means 5 winners, you get 10 R. That means every time you win 2-1. So if you have a $100 risk and you win a trade, you win $200. So 5 times $200 is $1,000. On your losers, you lose $100 in this case, in this analogy, right? 5 losers is minus 5R, which is minus $500. You made $500. You made 1,000 on your winners. You lost 500 on your losers. Plus 1,000 minus 500 equals plus 500. So net after 10 trades, you make 5-1 or 5R. Same. You have 6 winners and 4 losers. You don't win as much, but you win more often. That's key. You don't win as much, but you win more often. Okay? So the question then becomes, what's right for you? But see, Sanya, here's the problem with your statement. You say, but 50% batting average is easier to achieve. Is it? Is it easier to achieve? Let me ask you a question, Sanya. If I was shooting for 10R winners, is a 50% batting average easier to achieve than a 60% batting average? If I was shooting for 10-1 on my winning trades. So that statement in and of itself is flawed. It's such a broad statement. A 50% batting average is easier to achieve? Easier to achieve than what? Logic would suggest, and statistics would back this up, that the larger your profit target, the lower your batting average, means the less frequently it happens. Okay, for example, how often does LeBron James shoot 80% in a basketball game? Not very. Not very often. Okay? So for him to shoot 80% is an unusual thing. So you can't count on it happening more than 10 or 20% of the time. My point simply is, if you're shooting for 1.5-1, it's easier to hit a 60% batting average because you're not shooting for 2-1. The higher your target gets, the further your target is away, the lower the chance of you reaching it. So where does this fall for each trader? It depends. Some traders are really good going for just hit and run. I'm going to take 1R and I'm going to bat 70%. I'm going to take 1R and I'm going to bat 70%. Some traders are like, well, I'm not a great stock picker, so I'm not ever going to bat 70% because I'm just not a good stock picker, but I can bat 35 or 40%. Okay, well, if you're going to bat 35 or 40%, you might want to shoot for 2.5 or 3-1 targets because it's the only way you're going to make money. Okay? So simply the point here is it's a give and take. It would be wonderful if we could all just what? Have monster targets with huge batting averages. That's la-la land. That's not reality. Okay? Let's take it a step further. So how many trades should you be taking and what size account do you need to meet them? See, we're going to tie this in now. We just talked about batting average. 50%, 60%, 40%, 70%. It's going to vary for each trader. And it's not just going to vary depending upon your management. It's also going to vary depending upon your skill level. Again, some people are just not great stock pickers, but when they catch one, they really catch one. Well, if you catch one, then you need to take the most out of that trade. Make 5, 6, 7R out of it because, well, you're not going to catch them that often. Well, how does this all relate to how many trades you should take? Well, think about it logically before we dig deep in. If you're somebody who scalps half of an R or 1R out of your trades, sure, you have to have a higher batting average, but you're probably going to have a higher frequency as well to make up for the smaller targets. Right? If you're somebody who gets 3-1 out of a winner, sure, you can have a lower batting average, but you can also have a lower frequency. If you're a scalper, in and out, in and out, in and out, you're going to have a higher frequency. Now, how does, and we'll talk about it, don't worry, how does account size factor into that? Oh, it factors in big. It factors in huge. Why? Well, let me ask you guys a question. If you're going to take 3 trades a day, as a hypothetical, and you're going to do 3R all or nothing, what are the odds that you're going to be in 2 to 3 trades at the same time? If you're doing 3R all or nothing, and you're going to take 3 trades a day, what are the odds that there's overlap on the trades you take? That you're actually going to be in 2 to 3 trades at the same time? Like, extremely high odds. Like 80 to 90% of the time, you're going to have crossover, overlap, where you're going to be in 2 and possibly 3 at the same time. Why? Because it takes longer for stocks to hit 3R than it does 1R, right? It just takes more time for that to happen. So where am I going with this? What's my point? You can't risk as much money if you're in 3 trades at the same time versus if you're in 1 trade. You're in and out, done. In and out, done. In and out, done. Does that make logical sense to you guys? If you're in 3 trades, your buying power, your account is divided into 3 separate trades. You need enough money to take all 3 trades. If you're in a trade and then you're out, you're in a trade and then you're out. So you're never in more than 1 trade at any given time. You can use more buying power for that 1 trade. So your account size absolutely matters, depending on how many trades you're going to take and how many trades you're in at the same time. Okay? So it's very important you understand what your approach is in terms of, are you shooting for big targets? Or are you going to be a scalper? What's your batting average? What's your Sharpe ratio? Now, obviously, when you're brand new, this is a gray area because you don't know your first couple months. But then again, your first year, you're only supposed to break even anyway. That's a good first year. So the pressure is off you. The first year is just gathering data. It's just learning. Okay, so let's take a look. You got to ask yourself, all right, what's my goal? Oh, I want to make 120 grand a year, $10,000 a month. Okay. Why? That's up to you. Why? I don't care why you want to make 100 grand or 200 or 500 or a million. I don't care. How are you going to get there? How are you going to get there? Am I going to swing trade, core trade, intraday trade? Well, right now we're talking about intraday trading. Okay. What stocks will I trade? NASDAQ stocks, New York stocks, Amex stocks, Russell, whatever. Okay. NASDAQ and New York are the most common. What patterns will I trade? All these things will help you build a trading plan, which we'll talk about later. But right now, I want to talk more about your account. Have you given this some thought? Well, if I have a 50% batting average, a 2R average winner, and a 1R average loser, including commissions, just to make the math easy, okay? And you average 3 trades a day. That's 20 in 20 days per month. That's 60 trades a month. That's reasonable. That's probably where I'm at, about 50 or 60 trades a month, okay? Well, if you have a 50% batting average, that means you have 30 winners and 30 losers. Well, 30 winners times 2R is 60R on the winners. 30 losers times 1R is 30R on losers. Well, 60 minus 30 is net 30R for the month. Gosh, it sounds so easy, doesn't it? Gosh, it just sounds so easy. How often do you make 30R in a month? Not that often. You're going to probably be between 10 and 20R most of the time. Most of the time. Some months you'll make 30. Some months you'll make 0, 1, 2, 3, right? So how often are you going to be there? Well, you have to factor that into your 120K. Why am I saying this? Because, well, if you use this perfect world trading analogy, you only need to risk $330 per trade. But we don't trade in a perfect world. How am I going to make my 120 grand? Well, let's lower it from 30R a month, give ourselves some cushion and say you're going to average 15R a month. Right? Average 15R a month. We're going to cut it in half. Why? Give me cushion, flexibility. If I exceed that, wonderful. If I don't, oh well. Well, if I cut it in half, to make $120,000 a year, I need what? $660 risk. Right? If you're going to average 15R a month, 180R a year, times that by $660, you should have close to $120,000. Let's take a look. 660 times 180. So $118,800. Close enough. Okay? So you need a little more. Okay. That's what I want. How am I going to get there? What kind of account do I need? Well, I know I'm going to take 3 trades a day. Average. Some days might be 4, some days might be 2. What kind of account? do I need to risk $660? That's a good question. I don't know. I haven't thought about it. I mean, I've thought about it, but that's not the point. The point is most of you haven't thought about it. So if you want to make $120,000 a year on 60 trades a month, and you're going to average 15 R a month. Now, again, some of you might average 20 R a month. Some of you might average 5 R a month, but we're just being conservative here in the middle. You need a $660 risk level. Whew. Well, in this case, we're using $500. Why? Because I use 20 R a month. So you need $2,500 a week. You need $10,000 a month. If your maximum risk is 1% per trade using a retail account with 4-to-1 leverage, you need a $50,000 account, right? You need a $50,000 account. Leveraged to 4-to-1. So that account has $200,000 in buying power, but you only have $50,000 in cash. Now, all of a sudden, some of you are going, shit, I have a $12,000 account, and I want to make $120,000 a year. So what do? Let's be honest about it. What do? You go search the internet to find somebody who tells you can turn 12,000 into 120. Right? That's the first thing you do. We can talk about options later, Vark. I agree with you 100%. Most people, oh, well, that doesn't meet my expectation. That doesn't fit my narrative. I need to go somewhere else to hear somebody else tell me you can take 12,000 into 120. You can make 1,000% this year. Buy my course. Take my chat room. That's what most people do. Small account challenge on YouTube, right? Some people will max out their credit cards, borrow money, fine. But this is where traders go wrong. It's always, always, always better to be more conservative with your viewpoints and your goals with regard to when and how you're going to reach them. I'm not saying don't push yourself. That's not what I'm saying. I'm just saying when you're newer, first few years, it's probably going to take you a little longer to reach some of those goals. So give yourself that time. Give yourself that flexibility. You do realize that making $120,000 a year is like a 250% return, 240% return. It's pretty damn freaking good. Making 200 to 250% per year is outstanding. But it's not good enough for you, so you got to go find somebody else to tell you it can. So, can it be done with less? Sure it can. But now what happens? To make $120,000 with less than 50 grand, you're going to have to increase your frequency. You're going to have to increase your risk level. So 1%, now you're going to have to go to 2%. Well, guess what? You can't do 2% if you're doing 3R all or nothing. Now, if you take one trade a day, you probably could. But you can't do 2% unless you're a scalper. And that means your frequency goes from 2 or 3 trades a day to 5 or 6 trades a day, maybe 10. Right? So scaling frequency does not always amplify your results, though. You can't just say, because I take 2 trades, if I take 4 trades, I'll double my money. It doesn't work like that. You have to be able to find 4 of the same quality opportunities, the same level of quality. That's not so easy to do, as we've been finding out recently here in the markets. It's chop, chop, chop city. Okay? Hashtag buy the dip. All right, so be careful when you increase your frequency not to sacrifice quality. And if you increase your risk past 1%, which I do not condone, by the way, I do not condone it. Look, if you got 5 or 10 years of profitability in trading, you can do whatever the hell you want. You won't be listening to me if you do, that's for sure, and that's fine. You've earned it. But if you don't, I wouldn't go past 1%. And besides, what about this? What about this? So here's a trade I took on the Qs the other day, last week, okay? Here's a trade I took on Facebook a couple days ago. What's the lesson here? The lesson isn't that I made $1,800 on Facebook or whatever I made on the Qs. The lesson is that if you're risking 1%, you're going to run out of buying power sometimes. Yes, you will. So if you had a 1% risk and you had a $100,000 account, that's $400,000 in buying power on a retail account. This trade on the Qs would cost $322,000. This trade on Facebook would have cost $311,000. $1,000. You only have $400,000 in buying power. You're not going to be able to take a second trade. And if you do, it's going to have to be a penny stock. What if these trades happened at the same time? Then what? What if you saw the Qs and Facebook and you're like, I want to take both? S-O-L. Not S-O-H, S-O-L. Shit out of luck. Can't do it. That's at 1%. What if you did 2%? You couldn't even take these trades. Not even one. You couldn't even take one of these trades. Why? Because these particular trades ate up a lot of buying power. Some trades do, some trades don't. Right? Some trades eat up 50,000 in buying power. Not a big deal. Some trades eat up 500,000-600,000 in buying power. For example, Cliff called a trade on, I think it was the Qs or the SPY last week. It was a 50-cent stop loss on a $300 stock. 50-cent stop loss on a $300 stock. Do the math. If you needed to take 1% risk, you'd need 2,000 shares. 2,000 shares would cost you $600,000. You need 150,000 in your account to do a $1,000 risk. You see where I'm going with this, guys? Are you prepared? Do you have the account size to reach the goals you need? It's not like you can just go, yeah, I'm going to do 2, 3, 4% risk. You can't do that. In a prop account with 10 or 20 or 30 to 1 leverage, you could, but you can't do it in a retail account with 4 to 1 leverage. So if that's the case, and you know, for example, you're like, I have to do 2% risk, which again, I do not condone. What are you going to have to do? What are you going to have to do? Talk to me. There you go. Manual. Most likely, you're going to have to lower the price of the stocks that you trade. But is that foolproof? Heck no. There are plenty of times, guys, that I've traded $50 stocks with a 20-cent stop loss. And all of a sudden, you're eating up most of your buying power. Guys, a 50-cent stock with a 20-cent stop loss, 2% risk. How many shares do you need? All right. Say you want to do a $1,000 risk. $1,000 risk, okay, on a 20-cent stop loss. What do you need? How many shares do you need? Come on, it's easy math. You need 5,000 shares. How much is that trade going to cost? How much buying power? How much is it going to cost? 5,000 shares of a $50 stock. $250,000. But if you're doing 2% risk, you only have a $50,000 account. Right? If you're doing 2% risk, you only have a $50,000 account, which is leveraged to 200,000. All of a sudden, you can't do 2% risk now, can you? What's the point? You're going to have to understand how your account size in relationship to your risk level, in relationship to the goals you have set for yourself. How do they all work together? It's like a puzzle, right? How do they work together? Is it possible for me to make $100,000, $200,000 with this size account? Wait for it. With my style of trading. And if not, what do I do? Do I change my style? Do I add more money to my account? Do I change my management? These are all questions you have to ask yourself. It's like saying this. I don't know if this is a good analogy or not. I'm just making it up on the fly. If you have 20 seats in your restaurant, and you know there's only 3 seatings per day, that's it. For whatever, that's it. You can max out 3 seatings per day, 20 seats. That's 60 tables, right? Or 60 seats in your restaurant. And if you sell chicken sandwiches at $10 a piece, what's the maximum you can make that day? $600. You can max out at 60 people per day in your restaurant, and $10 chicken sandwiches is all you sell. The most you can make is $600 a day. Plus take out your costs. And then you're sitting there going, whoa, wait a second. We're open 5 days a week, and the most I can make is $600 a day, $3,000 a week, $12,000 a month. And then all of a sudden you're thinking to yourself, wait, I own a chicken sandwich restaurant where the max I can make is $12,000 a month, but after I take out employees and food costs and blah, 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 all I can make is $5,000. Well, now you have a problem on your hands. Because you need more than $60,000 to live. You're like, I need $100,000 to live. Now what do I do? Open up a drive-through, right? Raise the price of your chicken sandwiches. Lease the space next to you. Add more things to your menu. You see where I'm going with this analogy? In trading, if you find yourself in that scenario, what are your options? Add more money to your account, possibly add frequency, possibly change your trade management, possibly trade stocks but add options. You have to think about these things, guys, because most of you, you're like, I just want to make 100 grand a year trading. I want to make 50 grand a year trading. I want to make two. Have you thought about how you're going to get there? How are you going to get there? Okay. And one last quick comment, because I don't want to spend much time on this, guys. The type of account you have matters. Okay. So most people are very familiar, right, with E-Trade, Fidelity, Charles Schwab, TradeStation, Thinkorswim, Interactive Brokers, DAS, Lightspeed, right? These are really popular, common platforms. But there's one thing in common with all of these platforms. Every one of them, maybe Lightspeed a little different, but they're all retail platforms. They're all retail platforms. And retail platforms give a maximum of 4-to-1 leverage. We've seen some offshore brokers give 6-to-1, 10-to-1. We've seen prop firms give more. But you're likely, not all of you, and if you're international, you might have other options and choices, but most of you are going to fit into this mold. 80 to 90% of traders are going to be using these platforms, unless you're using shitty, crappy Robinhood or Webull. Most people are going to fit into these platforms. Most. Which means you're restricted to 4-to-1 leverage intraday. So figure that out. Now, there are different types of trading accounts, right? You can have a proprietary account. You might be trading your IRA. You might have an international or an offshore account. All those will matter in your trading. So let's briefly, without spending too much time, briefly go over. Retail accounts are the ones I just showed. TradeStation, Thinkorswim, Interactive Brokers, Fidelity, Schwab, whatever. They're subjected to the pattern day trading rule. You need $25,000 in your account or more to be able to take unlimited trades. If you're a non-PD account, it means you have under $25,000, which means you can only take 3 trades per week on a rolling basis. If you want margin, you can have a margin account that's a non-PDT account. You can have margin under the PDT rule, but again, 3 trades a week. You can have a non-margin account that's not a PDT account, and you can take unlimited trades, right? Man, that IOVA is just dropping, man. Oh, that bothers me. $24 down to $19.50 right now. Anyway, no leverage. You can't short. It's a cash account. You can't short stocks with no margin, but you can take unlimited trades. I think you have T+1 or T+2 on the settlement date, though. Prop accounts. There are some prop firms left. Very few good ones out there. Most of the time, you have to put up some form of risk capital, $2,000, $3,000, $4,000, $5,000 of risk capital, and they'll give you 20-to-1 leverage. At one point, I had a prop account that gave me 300-to-1 leverage. You have to earn that right, though. They don't just give it to you. You have to earn the right because you're a good trader and they trust you. But the point is, I don't want to talk about it today. There's a whole bunch of issues also with prop accounts. They lock your money for a year. They have access to all your 401k, IRA, all of your accounts they have viewing access to. You have to pass the Series 56, 57 test, so you have to have a license, which means you're under the thumb of FINRA. So if you choose to move your address or something or change your job, you have to tell FINRA and update everything. It's a pain in the ass, right? So prop accounts have benefits, but they also have some drawbacks. IRA, 401k accounts, most of them you can't short in, most of them. Most of them are cash-based, not all, but you can't shorten their cash-based. And international offshore accounts are very, very, very appealing, but they're dangerous. They're appealing because you can get 6-to-1, 10-to-1 leverage with a $2,000, $3,000, $5,000 account. You can get unlimited trades, but you have no protection and you're not allowed to have them in the United States. They're illegal. People do them all the time, but you're not allowed to have them. And they could take your money and you have no recourse. So if you choose to go that route, I don't recommend it, but if you choose to go that route, I would put as little money as possible in there just in case, they happen to take your money, which has happened to people in the past. I won't name company names, but most of you know what I'm talking about. So be careful. Choosing the right one is largely dependent on your financial position. If you got over 25K, just get a retail account. Don't bother with the rest of the fluff. Just find yourself one of these fine companies over here. Okay? Personally, I use TradeStation. Unmall uses Interactive Brokers. In my opinion, they're the 2 best. Lightspeed's pretty good. Thinkorswim's very good. They're all pretty good. Interactive Brokers is great for order execution. It's great for hard to borrow stocks. They do have commissions. I think they have a non-commission version now. I think TradeStation's better for customization. I think it's better for scanning. I think it's better for charting. But again, pick which one you like. I'm not here to tell you which platform to use. All of them are solid. Some are a little better than others, okay? Now, trading plan considerations. How many of you came in? You don't have to answer, it's rhetorical. How many of you came in without a trading plan? Without a business model? You literally was like, I hate my job. My boss is an ass. I just can't stand doing this anymore. I want to be a trader. I saw some guy online. Saw this guy named Jared. He seems like a decent dude. Has nice cars. I think I want to be a trader. Oh, really? Okay. Hey, I saw somebody else turn $583 into $300,000. I want to do that. He looked like he hasn't shaved or cut his hair in years, and I want to do that. Oh, okay. That's it. That was the extent of your consideration into your move into the trading realm. Okay? Yeah, I got to tap my tree to get some syrup. Anyway, I'm just kidding. Respect. Anyway, my point, you didn't give it much thought. You didn't give it much consideration. But yet it's a pretty big decision, isn't it? You know, in carpentry, they say, measure twice, cut once. You guys aren't even measuring once before you cut. You're not even measuring once, man. You're just throwing some money into an account, usually Robinhood, and you're just hacking away at this. Oh, did you see Bitcoin? I watched Saturday Night Live. Now I know everything there is about Doge. Really? Oh, okay. It's funny, but it's not funny. This is a business, man. The hardest business you'll probably ever try in your entire life, and you just whack and hack away at it. Like, I'll just try that out. Why? Because there's no rules. Because anybody can do it. So you can't just go get a job at Goldman Sachs, can you? No, you can't. That's why you don't have a job at Goldman Sachs. You can't just go be a crane operator. You have to go through an apprenticeship and get a license. That's why you're not a crane operator. But hey, anybody can just open up an account. So, no plan, no rules, no success. That's it. No plan, no rules, no success. Don't be an idiot. Hopefully you'll find my channel before you lose money. Combine that with being stupid. Inconsistent risk levels, not taking stop losses, no money management, no trade management, timeline is too short, you're undercapitalized, you're over trading on bad days, you're under trading on good days. And this is just a recipe for failure. We talked about this a couple weeks ago. Don't be an idiot. You don't do it in any other aspect of your life, except for maybe the voting booth. You don't do it in any other aspect of your life. Why would you do it here? Would you let your 10-year-old drive you to work? Probably not. Why? It's too dangerous. They don't have any experience. So you're like a 10-year-old trying to drive a car. You're an accident waiting to happen. It's true. You're an accident waiting to happen because you haven't thought through this. You haven't planned it very well. And when that happens, the only way you succeed is just dumb luck, which means it's rare. It's extremely rare. So what do you have to do? You have to put things on paper. Talk to people that know more than you. That's what we do in life. We're human beings, right? If you want to, I don't know, build a kitchen table, you probably just don't go to Home Depot and buy a piece of wood. You probably went on YouTube. You probably called a friend, say, hey man, I'm trying to build a kitchen table. Can you help me out? Probably went, searched it on the internet. But in trading, unfortunately, there's just so much fluff and nonsense. Most of the stuff you're reading is utter crap. Okay? So, questions for yourself. How well do you really know yourself? Are you jittery? Are you patient? What are your strengths? Are you technically savvy? Are you process information quickly? Are you a slow learner? Are you a confident type A personality? Are you introverted? Right? What's your daily schedule look like? Do you have all day to trade? Half a day? 1 hour a day? What's your capital situation? I got $4,000 to my name. Oh, I'd put it in IBIO. Not. Anyway, what's your capital situation? You have more or less than 25,000. What's your timeline look like? How much time are you willing to give this? All right, Jared, I'm willing to give it 2 hours a day for 3 years. I'd say you have a reasonably high chance of success. Jared, I'm willing to give it an hour a day for 6 months. Don't even start. Don't start. This isn't for you. Okay? What other obstacles might you be facing? Just lost your job, maybe you're trading with some stress. Family member just passed away, highly emotional, etc. and so forth. These things are important. They're really important to go down this list and go, where do I fit? Where do I fall into this? Okay? And then your trading plan. We've seen this before. I'm not going to go over it. Mission statement. What are my intentions? What's my timeline? What's my batting average and sharpers? What are my goals? And then obviously you're going to trade for a few months and see where you're at. That's what that first year is all about. Figuring out who you are as a trader, who you are as a person, and where you're at. Okay? Money management, maximum loss rules, target rules, risk rules, rules for increasing, decreasing risk. Okay? Execution, stop limits, stop market orders, strategies you're going to use, buy setups, sell setups, 3-bar plays, whatever it is. Trade management. You're going to be all or nothing. You're going to be bar by bar. You're going to use pivots. What's your follow-up? Do you have a consequence system? Do you have a trading buddy? Do you have an accountability partner? All these things are important. Okay? Because otherwise, you're not going to get anywhere. So, you guys saw this slide. Was it last week or 2 weeks ago? I'm going to end with some words of encouragement. You don't have to be perfect to make money. Just diligent and consistent. But more importantly, understanding what you need to do to get to the goal that you set for yourself. If you set a goal for $120,000 a year, we went back, we talked about it. Well, what size account might you need? How many trades per day do you think you're going to need to take? What should your maximum loss limit be given your experience and the goals you've set for yourself? Okay? It's important because most of you right now, if you were to actually go through and like break this all down, everything we just talked about today, you would fail. My guess is most of you have an account that's not acceptable to hit the goal you want to hit, and you have a timeline that's not reasonable to hit the goal you want to hit. I'll repeat it. Most of you, many of you, some of you, whatever, don't have enough money in your account to reach the goals you're trying to reach. You're expecting too much of yourself. Too much. And the timeline in which you've chosen to achieve those unrealistic goals is too short. Okay? I know. You're having a little bit of cognitive dissonance right now. I've just presented you with facts that go against the narrative you set out for yourself, and now you're having a little bit of stress going, shit, what do I do? What should I do about this? Should I just quit trading? Or we use the restaurant analogy. I need to figure something out. I need to fix this. I can only sell 60 chicken sandwiches a day. What do I do? Do I add a drive-through? Do I add more things to the menu? Do I raise the price of my chicken? So if you're a trader, what do you do? What's going to help you achieve that goal? $50,000, $100,000, $500,000, $1 million. How are you going to get there? What's it going to take? What kind of an account size is it going to take? What kind of timeline is it going to take? How many trades a day is it going to take? What type of management am I going to need to get there? Am I going to have to risk 1%, 0.5%, 2%? And if so, what do I need to change to be able to do that? Wow. These are things you want to think about, okay? So, I hope you guys learned a little bit about how to be a more successful trader, mainly from the preparation standpoint. Do you have right now an account size and a trading plan that will help get you to that goal? Are you really missing some things? Did you underthink some things and now you're like, shoot, there's a gap between what I thought and the reality of the situation? Because it's important. Because most people can be successful traders if they plan properly. But most people don't plan properly, so most people aren't successful traders. It's a conundrum. It's because there is no licensing, there is no course, right? There's no training that's required to do it, like there is in every other job, okay? You don't just be an airline pilot just because you've decided tomorrow I want to fly a plane. No one will let you fly a plane till you get your license. All right. So I hope you guys learned a little bit there about how to be a more successful trader. I am Jared Wesley of Live Traders. We'll get back at it again next week.